Thank you, everybody who's attending. My name is Tom. I'm one of the realtors and advisors here and multifamily specialist. All right, without further ado. A little bit about Marshall Reddick Real Estate. First and foremost, we are a real estate company. That means a brokerage full service for helping and purchase and sale properties. We are a property manager as well as a private lender. We make it possible to safely and simply invest in residential real estate in carefully selected areas of the United States. Our firm provides education, investments, in-house professional real estate services, along with access to other vetted and necessary resources such as contractors, lawyers, insurance agents, and certified public accountants. Now, those all are going to be very crucial to what we're talking about here today. So multifamily investing is a little more involved. So having all of those people to help really helps step up your level of return. All right, a little more about Marshall Reddick here. These are all the markets that we operate in. Of course, we're going to be talking mostly about the Orange County and Southern California market today. However, we do have offices in Texas, Tennessee, Florida, and we're branching out to quite a few other places. So if you know a little bit about what we do mostly residential investments, single family, duplex, triplex, fourplex, stuff like that. That's our bread and butter. However, we also do smaller multifamily properties. So that's for another time though. So we'll go over that as well. Topics we're going to cover tonight, however, why multifamily and why value add? What is the cap rate? Buyer seller representation and how to find 3 to 8 unit properties, property management, financing, and last but not least, we are going to go over a real property that a real Marshall Reddick investor purchased, and we actually just got some more plans approved, so that's awesome, and we'll be able to provide some updated numbers and analysis on that. Okay. First and foremost, why multifamily? Why value add? Multifamily properties are kind of illustrious to a lot of real estate investors, especially if you own a property, a single family residence or something like that, and you really want to step it up. And why value add? Now, a lot of people don't know really what that even means to begin with. Value add definitely means increasing rents, increasing quality of the property, increasing the NOI in general. All right. First and foremost, economies of scale. Now, if you have one house, your rent gets to get increased one time per year. If you have one fourplex, your rents get to get increased over 4 properties. So give an example of that. That means if your rent is, just to keep it easy, $1,000 a month, and the average market rent went up $50, that means you get $50 more a month or $600 a year. Now with a fourplex, you get to multiply that by 4. So you still just acquire one property, and now you're increasing $200 a month, but spread out over 4 $1,000 units. It seems pretty small to increase that dollar amount, $50 a month. However, when you start adding up 5, 6, 7, 8 years for $50 a month, it gets pretty attractive. Also, rents are only going up, and cash flow, again, that keys into the economy of scale aspect of it. Rents are constantly going up. A lot of people like to make the analysis of, hey, real estate markets, when there's recessions or there's problems. Yeah, but if you look at the market trend of the rents never go down. It's a solid investment. And it's an example I like to give is the numbers are always going to look the worst the day you buy it because they only go up from there. There is less competition. Now that I'm not saying there's no competition, there's definitely competition, especially for properties that are very attractive to investors because there's a ton of money to be made, but there's definitely less competition because you're not competing with people who are buying primary residences. Once you get up past 3 to 4 units, you're really just competing with people who are real estate investors and who are running numbers accordingly. If anybody here has tried to buy a property to live in the past, 2 to 4 years, it's pretty crazy out there. It's still crazy out there. However, there's a little bit less competition when it comes to the multifamily market. Not to say you're not going to write a couple of offers on a couple of different properties. However, it's not going to be aggressively overbid by $100,000. The opportunities do exist as well. Now, I can say that because I'm actually currently in escrow with a client of mine with a great multifamily property. We also have tons of other things popping up that we're going to be covering today about how we find these deals and how we put these deals together. And last but not least is the equity gain. Pardon me. Equity gain of the property, which we're also going to go into a little bit later with cap rate reversion, where if you increase the value of the property, you can do a forced appreciation of your multifamily property. That's really kind of the biggest point of this webinar tonight, is showing how to make that forced appreciation and essentially flip income property. All right, acquisition prices, what to expect when looking for these properties. In the Orange County market, we started about 1.25, and that goes up to 2.5 to 2,750 for 3 to 8 unit buildings. Of course, you can go on that higher scale if you're looking at stuff in Newport proper. If you're looking in any of the nice coastal regions, same with Los Angeles. You're looking at acquisition price of $950 all the way up to about 2.5, and that's kind of on average of the properties that I personally deal with and that we personally deal with here. That's kind of the sweet spot where you can still get a lot of great appreciation, a lot of great rents, and a lot of good return. Okay, now some people are investors here. They know what cap rates are, but I just want to explain it for everyone just so we know what we're chatting about. There's many different ways to value properties and to compare numbers, price per square foot, ROI, IRR. Anybody who knows real estate, they know there's many different ways to measure what's a good deal. However, today, just to keep it easy, we're going to go on capitalization rate. Why do I like capitalization rate? Because it goes off of the net profit of the property, the net operating income, divided by current market value of the property. It keeps it a very simple formula and very simple for us to compare different properties. Now, also what to expect for going in cap rates, going in versus expected cap rate, pardon me, an expected cap rate for a stabilized property on top of that. Orange County, going in cap rate, you can go from a 2% on the low side to a 4% for an expected stabilized cap rate to value the property. LA County, you're looking at from 3 to 5. Now, on the low end of that, a cap rate in, just for an example, a cap rate in a upper scale luxury neighborhood is going to be closer to the 2.5 mark. Now that does mean that the purchase price is higher versus the net operating income. So it'll be a little bit trickier to make cash flow. However, that doesn't mean it's a bad investment. But we usually like to hover around the 3.5 to 4% cap rate, and that's about the going rate of what multifamily real estate in the Southern California market does. Now you're going to get higher cap rates, but generally that means you're not in as higher class of a neighborhood, so to say, a higher class of a market. You're going to be more so a D or C class, but you do get a little bit higher cap rate, but there's more expenses expected with that. All right, cap rate formula can also be used to assess value. The terminology for that is actually called cap rate reversion, and that is something that lenders do use. You can value any multifamily property with a cap rate reversion, and a lender will acknowledge that. Now, what does that mean? That means if you've got a desired cap of 4%, you can take your annual net operating income divided by your desired cap rate to get the value of the property. All right. Now, what's nice about this equation is, of course, if you start with the larger number on the annual net operating income side, otherwise, you're increasing rents, you're increasing the value of the property, you are cutting your costs, you're getting a good property manager in there to see what the expenses are, really look at the books and trim a lot of stuff. That'll actually keep your desired cap rate. Well, your desired cap rate stays at about 4% or 3.5 for an example property we're showing today. But if your NOI goes up, so does your value. All right, we're also going to show how to calculate that net operating income, just like this. So your net operating income is a measure, or it's the total of gross rents. We also do take all maintenance and vacancy into account, so that's with an 8% vacancy for an effective gross income of 32,568. And stick with me for a little bit here because there's a lot of numbers going on here, but I'm going to keep it very simplified on the tail end of what we're looking at. So all these numbers in the red here, those are numbers that you are actually going to see on the property. We always make sure all of our numbers are taken into account with these properties because the last thing we want to do is overpromise on anything. So we're always very under-promising with these numbers. So you've got your property tax, which of course you got to pay, the insurance, utilities, usually for multifamily properties, that would be water, sewer, and a common electric, as well as trash. Sometimes they wrap that into one. Your miscellaneous overhead, your maintenance, your leasing, and management, right? So if you look on the right, you've got all the numbers. Those are your gross rents. So the tenant is paying $1,000 a month and $1,000 a month and $950 a month for a total gross income of $2,950 for this triplex property. Now our net operating income is your gross, right? Your effective gross, which is your 32,568 minus your operating expenses, your 12,239 for a net operating income of 20,270. And this hypothetical market, say, probably in Tennessee, you've got a cap rate of 6%. What you'll do is you'll take 20,265 divided by 0.06, and you will get a cap rate reversion value of 337,917. And like I said, that is an actual way to value properties, and that's what we're going to be talking about today. All right, here's the formula on paper, just to keep it simple for you. Again, your net operating income divided by your cap rate equals the value of the property, 337,917. Okay. Other metrics, like I was talking about, there's other ways to measure properties. Different investors like different ways, like your cash on cash, which is your cash flow divided by cash invested. That's for people that are concerned with how much cash your cash is earning you. Hence the name cash on cash return. Your annual return on investment, this is also a really good metric because it takes your total profit into account, i.e. your appreciation, your tax incentives, the principal pay down of the property. There's a lot of other things associated with it. Variable expenses are something else that, again, like I was alluding to earlier, we always take those into account, your vacancy, your maintenance, and your leasing fee. So yeah, there you go. Income before variable expense, cash flow, and variable expense. Okay, now here is one of the most important parts about buyer representation and how to find these 3 to 8 unit properties. I'd love to tell you there's a magic trick, like a lot of other real estate gurus will go out there and tell you, here's an easy way to make money, but unfortunately, it's not that easy. Now, what do we do on buyer or seller representation? First and foremost, we usually like to take an agency agreement in this situation because what that really does is that helps us lock you in as a client of ours. There's a lot of legwork that goes on in the back end of us finding these properties and putting these deals together. And we work with a list of investors here at Marshall Reddick who let us know that they're in the game and that they're serious. With that also does come unlimited one-on-one consultations. We do spend as much time as possible with our clients, as much time as needed, and as much time as you would really like. Please come into the office. I can't understate that enough. I love it when my clients come in. I love meeting face to face. A lot of the real estate transactions we do are usually multi-state, 1031. Somebody's living in New York or Tennessee or Idaho, and hey, I've got a place in California, I've got a place in Florida, and they're trying to sell real estate and buy real estate. Now we do that all day long, but there's nothing wrong with a good old face-to-face interaction, especially if we're focusing on these Southern California properties. It's nice to be able to do transactions where I can meet face-to-face with my clients and see the properties and walk the properties. Also very important to come in and meet the teams. Like I said, these multifamily transactions are extremely involved. And I tell you what, if we didn't have the team behind us that we do here at Marshall Reddick with our property management and private lending, it would be very difficult. You'd be going out and trying to find and mix all these different people together, and there'd be communication and all kinds of things. Here's the great thing about it here. I sit one desk away from our head of property management, Scott Pastel, and the private lending team is about 2 cubicles away. So communication is great here, and that's why we can truly and effectively get these properties turned around and build that equity for you. All right, and this is also something that's extremely understated. Be prepared and the need for speed. These properties sell quickly. Even though there is less competition, like I said, there is not no competition. Anything that is a good deal, anything you're going to pick up equity on the acquisition really is going to move quickly. Now, does that mean that we're going to miss these deals? Of course not. Like I said, the one that we've got in escrow right now is a great deal. We acquired it at a 4% cap rate, which is really, really good considering, and it's fully performing. There were 17 offers on it, but we were the first and we were the best. So that is what's most important to getting our investors' offers accepted is, again, and tying back to the one-on-one consultations, you need to have trust in the team and be able to act quickly and understand that when we say, hey, this is a good deal, it is in fact a good deal. And this is also a very unique part about our company. We do bird dog. We do bird dogging, pardon me. So if you're telling me what you're looking for, we actually go out and find those deals for you. What does that really look like? Well, what we do is we put the deal together. Hey, I'm looking for a 4-plex in Huntington Beach. Awesome. Anything on the market is going to be a very low cap rate, and there's going to be stiff competition, right? What do we do is we put these deals together off market, right? How do I find off market deals? Now, this is what I was talking about where real estate gurus tell you it's easy to make money, and I'm here to tell you it's hard. I'm here early and I'm here late, and I'm sending mailers, I'm sending marketing pieces, I'm calling, I'm maintaining relationships, I'm networking, I'm talking with other investors who are in the market and seeing if they're going to offload properties. And the majority of deals that I put together are put together off market. And that really also helps massage the deal over, because you don't have unrealistic sellers who then try and take advantage of the deal. Competition is stiff for listed properties. As I said before, the 4-plex we have in escrow right now, there was 17 offers on the property. We need to move quickly. All right. Property management. As I was explaining before, property management is crucial. The main reason for that is because the whole point of these multifamily properties is the net operating income, and the only way you're going to raise the net operating income is if you effectively raise rents, right? Renovating properties, increasing rents to market rate, as well as cutting costs and expenses. So all those pesky maintenance fees that you would really see, with older properties, we make sure to get those handled. We make sure to trim costs where we can trim them. Also very important, Marshall Reddick was a real estate network first and then eventually became a property management company. However, the reason why we really took the foray into property management is because we were seeing deals that weren't managed effectively for our investors. Our slogan for the property management, which I like a lot, is created by landlords for landlords. So our motivation really isn't to gouge our investors with a bunch of fees and expenses and all kinds of stuff. We really just want our investors to know that they can have trust and understand that we really know how to maximize any property that you own or are looking to purchase. We're going to continually analyze that property year over year to make sure you're up to market rents. We're going to make sure that any added expense or anything extra is cut out. And we also don't have any of those crazy hidden fees. This is one of the main reasons why we post these on our website, which you can find these on marshallreddick.com under the property management tab. Simple, hassle-free, no hidden costs. You see right there. We only have a lease renewal fee, tenant late fee, which is split with the landlord 50-50, which normally that's not done, and leasing fee of 50%. But other than that, there's no setup fee, there's no maintenance coordination fee. Now that's a big one if you have any properties currently managed and you notice your property manager's always finding some crazy stuff to fix and repair. Well, it's because they normally charge 10 to 20%. We charge nothing. We also don't charge an eviction coordination fee. Again, here's the explanation of the fees down there. Nothing hidden, nothing secret. These are all posted publicly on our website for you to see. We keep it very transparent. Here is a map of all the units that we manage, all the way up from Malibu, all the way down to San Clemente. There's a lot of properties. These aren't all just single family. A lot of these are multifamily properties, a lot of which are in LA, a lot in Orange County, close by our office in Irvine, or in Newport, pardon me. A lot of properties in Irvine. So, yeah. Here's an example property of a 4-unit building we currently have under management. It's 4 2-bed, 1-baths, which in my opinion is a great unit composition. It's a recent value add acquisition purchased with Marshall Reddick. So again, this is the situation that we're talking about. We had acquired this for a landlord, for one of our clients turned into a landlord, and we did a lot of work to raise the value of the property, essentially increasing the equity of the property through cap rate reversion. Marshall Reddick is the manager. We used Marshall Reddick to manage existing tenants, move outs, upgrades, leasing for big rent increases, and handle long-term management of the property. Here's another 5-unit building that we manage in Santa Monica. Santa Monica is a little bit trickier with rent control and everything like that, but it's a wonderful unit composition of a 3-2 and 4-2-2 units, very large units. I've seen them. 3 of the 5 units have turned. We've managed over $200,000 in upgrades, which have resulted in big rent increases. Again, we don't charge a project management fee. Santa Monica rent control is very strict. However, we like to show this property as an example that we know what we're doing with these cities. We do a lot of research. We do a lot of homework. We have a lot of chat around the office every time they make an adjustment. Now, this is very important, especially with all of the regulations that have really been enacting for us here in either the LA County or California in general with regards to all of the restrictions they put in place. All right, here's an 8-unit building as well. Now this is usually about the sweet spot that we like to hit from 4 to 15 units, but 8's right in the middle. It's not too big, not too small. Decent unit composition of 2 1s and 1 1s. They're very good size units as well, but we've turned 4 of the 8, so half of this building has been turned over. With $100,000 plus in upgrades, resulting in big rent increases as well. That's also probably one of the best things is having a vacancy, because that gives you the right to get in there, renovate the unit, and get it leased out as quickly as possible. This is City of LA rent control property plus community investment department, stricter than California. So, all right. And again, if you wanted to see any more fees or information, you can go to marshallreddick.com/management. I know we're talking a lot about management, but I cannot stress enough how important it really is to have management in this part of the transaction. I know we're going to be learning about multifamily investing, but property management is the absolute keystone to making these properties a success. All right, leasing fee, monthly management fee, 7% 2 to 4, 6% 5 to 15. This is also something I wanted to talk about with California statewide rent control, AB 1482. Landlords may annually raise rents the lower of 5% plus CPI or 10%. Other cities have additional restrictions like Santa Monica, Los Angeles, but that is also very crucial that we know all the rules and regulations with these things to really increase the net operating income of these properties. We're professionals with time and resources. Let us handle the heavy lifting, and stress on the heavy lifting. There's a lot of back end work that goes on in this office. So. Okay, financing, also a big piece of the puzzle here. What's great is we actually just lowered our rates. Where a lot of people are going up, we're going down. So with these commercial buildings or multifamily in general, the way the loan works is you've got a 30-year amortization, 5, 10, 15, and 30-year program. All these loan programs are also posted on the website. And if you have any more in-depth questions, you can reach out to somebody from the private lending team. Also, 4 units and below, a lot of people don't know this, that it's actually a residential loan, which is great because you can lock into a 30-year fixed. If you have any questions about that, you can reach out to Reed Hazard. He's a great asset to the team here. He's wonderful. He does the majority of the loans that I work with that are residential multifamily loans. Again, fees and more information on marshallreddick.com/loan programs. What is also great about these programs and about the private lending in general, they are true asset-based financing. What that means is that we look at the asset, not the client's files. To give an example, that's exactly what this fourplex that we have in escrow is right now. It is based on the rental income of the property and not the books, so to say, of the client themselves. So perfect for these 4+ unit buildings because you have a high income coming in and they usually make sense one way or another. Reasonable fees and interest rates, plus you get to work with the Rockstar team here. Quick closing, 21 to 30 days, appraisal waive for 50% or under. And also, last but not least, renovation, bridge, and new construction programs available too. But financing, super crucial because, again, cutting the costs increases your NOI, gives you a bigger profit margin. All right, here's the loan rate sheet as well. Again, any questions here, you can reach out to somebody from the private lending team and they can give you some more information on that. But a lot of these rates are very competitive for these properties. Okay, now this is a case study that last time we did this webinar, we had actually just closed on, and what's really exciting about it is that we just got approval for a little added bonus treat. So this is a triplex in Torrance that we had helped one of our Marshall Reddick clients identify and purchase. This property was actually on the market, which was crazy. I tell you what, we got our offer in and accepted in under 2 hours. Our client did great to be ready and be prepared and understand that what we were looking at was a gold mine with this property. And what's crazy is when you look at it from the outside looking in, you'd say, I wouldn't touch that with a 10-foot pole. That's because we purchased this, or our client had purchased this building for $1.65 million. Now, that would not be a good purchase considering the current rents were being in $76,800 for an NOI of $32,000. This is why I wanted to explain with cap rate, because if you look at cap rate, you go 1.9 cap, yeah, next, not touching that. However, what we were able to see and identify with the property is the fact that, it's a very large building with a triplex, all 3-bedroom, 3-bath units. So, where it's 165, we were able to always read through the lines and see, hey, this thing is going to be a cash cow. I know personally, because I grew up in the South Bay, Torrance units of that size bring in anywhere from $3,600 to $3,800 a month. Here's what our client had done with the place. It looks great. We got our team in there. We renovated it. It really wasn't that much of a renovation. We actually just put in floors, new paint, new fans, actually even painted the kitchen cabinets. So we did end up changing the appliances and the sink and everything, put some quartz countertops, but we just painted the existing cabinets and it really makes the place look a heck of a lot better than it did. So here are our after numbers, which is absolutely amazing. So remember, we purchased the property at 165, so we're going to use that purchase price as the same, 30% down. We spent about $120,000 in repairs for all of the units, which was a really good budget considering. The after rents, if you remember, the before rents are $137,400. That is really high for an NOI of $77,726 for a cap rate of 4.7%. Now, This is a 4.7 hold. I can guarantee you, you're not going to find a 4.7 cap absolutely anywhere for investment property in Southern California. You have to make that 4.7 cap. Also, what's great about the the cash flow on this property, your positive cash flow monthly of $1,000 right now. What's actually a really great kicker on this one, that's the little icing on top we were talking about. There was a very large garage in the back, which we just got the permits approved for an accessory dwelling unit. That's something we're not going to go too in depth on, but it's something that we always look out for here at our real estate investment multifamily team, is for all kinds of ways to increase your income. Now, an ADU costs you anywhere from 75 to, sometimes more, sometimes less $1,000 to add, but we got approval for a 2-bedroom, 2-bath, which is going to effectively rent out for another $2,800 a month. So that's going to bring this property somewhere close to $4,000 a month of positive cash flow, right? And that's going to be on year 2, which is really cool. This property really just turned into an absolute dream for our Marshall Reddick client. And again, something we can do for you. Also, what's great about this, these numbers were run at a 3.8 cap, which I would effectively say it's actually valued a little bit, a lower cap rate neighborhood than that, which again, lower cap rate means better neighborhood. But at a 3.8 cap, it's valued at $2,045,000, which was actually very interesting because when we had it reappraised after the renovation, even before renovating the rear units or the approval of the ADU, it was appraised at 1,975, and this client pulled out the majority of their down payment. So again, you got to act quick on these deals. They're few and far between, but they are out there, and we are here to find them and acquire them for you. Okay, here is also an analysis of a 6-unit property in Huntington Harbor. I live in Huntington Harbor. I do a lot of business with the multifamily units in both Huntington Harbor, Huntington Beach, Costa Mesa, Newport, so on and so forth. Here is a property that is actually available right now. This is a property that we have as an off-market opportunity that the landlord is currently working with us, and we're 1031ing some of his other property. You have a purchase price of $2,000,004 for 6 units. Now, that is a good price for that amount of units, especially in the neighborhood that they're in. And again, what I wanted to explain is a going in cap rate of 2.86 is low. Current rents are a little bit under market rent. $119,640 for all 6 units, bring you to an NOI of $56,120. Prime location. I love Huntington Harbor, but what's even better is here is our after numbers. It's going to cost about $160 to repair and upgrade, which is going to be some cost there. But again, if you're looking for a renovation loan, we have those here. But after rents bring you all the way up to $166,200. Increasing your NOI to just north of 6 figures means this building will be netting 6 figures a year. Pretty cool, huh? For an after repair cap rate of 4.19, and I can tell you, being that close to the beach, a lot of these buildings that are performing are trading hands at a 3.5 cap rate. For an after repair cap rate reversion value of $2,875,000. All right, so there's also a couple questions that we receive a lot for people who are interested in learning about these properties and seeing what we have going on here. We're going to go through all the quick ones. I already own a multifamily unit and I self-manage. Can Marshall Reddick help? I mean, short answer, yes, but long answer, yes, because like we were talking about before, we can step in, analyze your property's performance, really look at what market rents are. If you have any vacancies, we can help renovate and get those filled to top of market rent and really just increase your income. What I like to say is, for landlords, when's the last time you've gotten a raise? Everybody loves getting a raise. Well, if you own one of these buildings, you deserve a raise in your property, helping bump that up what your allowed rent bump would increase either 5, 8, or 10% accordingly. Renovations and really getting the property to sing the way it should. I'm scared of rent control. Is multifamily safe? That is definitely a question that we receive a lot of, especially since all of the COVID regulations and everything that we've seen. You should not be afraid of rent control, but you should be educated on rent control. It's something that we do deal with. It is something that is, both good for the landlord and the tenants, because it keeps landlords from raising too crazy, but it also keeps the expectations of the tenants where they should be. Is multifamily safe? Multifamily is definitely still a safe investment because of this. So there's many ways that we can increase the value of the property. Just schedule a consultation if you have more in-depth questions about how the property management team helps with that. I'm contemplating a 1031 exchange. Can I exchange single family into multifamily? This, believe it or not, is a question that we get a ton as well. A lot of people have, you inherit a parent's home, you have a second home or a vacation home, something along those lines that you've been using as an income property for a few years. And you say, hey, you know what, that $2,800 in rent that I'm getting from $1 million in equity just really isn't cutting it. So yes, you are allowed to 1031 from a single family to a multifamily home. Anything, when it says like for like, well, all that means is the property is considered an income property. You've had a tenant in place, you're collecting rent. You can exchange that for another income property, be that 2 to 20 units. You go, of course, north of 20, whatever size you're really looking for. But as long as you're transferring from income to income property, yes. With Marshall Reddick Private Financing, can I buy down my interest rate? That's going to be a question for the private lending team, right? There's all kinds of things that really come with working with an in-house private lending team like ours. My favorite part is that it's all relationship based. So it's case by case basis, and the team would love to reach out and have a conversation with you. I'm interested in the Huntington Harbor 6 unit. What are the next steps? Next steps, schedule a consultation. Property is available. Property is, we are looking at different offers now, but if you have interest, please feel free to reach out and schedule a consultation, or in general, feel free to reach out and just come on into the office if you're here local. As I said, we do a lot of these transactions for our investors. Our team is, both growing and in experience and size. We're tackling bigger and bigger deals and more day by day. So get a part of that action and come on in, meet the team, meet the private lending team, the property management team. We'd love to see how we can better help grow your real estate investment portfolio. All right, guys, short and sweet. Thank you for attending here this evening. I'm going to go ahead and leave my information up. If you have any questions, we will answer those questions with this week's follow-up calls. And thank you very much for joining us this lovely summer afternoon. And I look forward to helping you acquire your next multifamily property with us here at Marshall Reddick. Thanks again.